And welcome everybody to this week's edition of Selfwealth Live, the technical analysis edition. Here with Jason McIntosh from Motion Trader. Hi, Jace. How are you today? No, he was with us. He might have been we were having a few technical difficulties as we started, and he looks like he's just dropped off. So we'll continue to go here. Hi, Jacques. Thanks for coming, and thank you for your tickers already. Jason, are you there? You pop back on. No, still looking. Might be the glasses. I've never seen you wear. No, I can't hear you, and we can't hear you. I don't think. I hope the crowd can hear me. Shout us a hello on the chat if you can hear me, please. And if you can't hear Jason, then we'll get online very soon. Thanks for coming, everyone. No audio. No audio. We had you. Sorry, Jace. All right, he's popped off, and hopefully we'll sort that out as soon as we can. So before we go, let me just talk about, obviously how we run this show. Generally, we run it reasonably smoothly. Obviously, this is a bit of a technical a glitch on iPhone. Jason, so he's back up.
Oh, Rog, do you have me now?
Yes, I've always got you. We just can you hear me? Can you hear me?
Yeah. I don't know. These IT things, when they're working, it's great, but then sometimes we get glitches. So let's see how we go. Hopefully everything stays together.
All right. If everyone can hear Jason, please put a 1 in the chat, please, because I heard someone just said they can't hear you. So Elizabeth said she can hear me. Please put a 1 in the chat if you can hear Jason. Thanks. Just as we go, obviously this is a session for you to be able to ask an expert in the industry that's had over 30 years. So what we do at the start is we analyze the 3 sort of major markets that Selfwealth offers, which is the Australian market, the US market, and the Hong Kong market. And then it's open to general questions. We've got a lot of 1s. That's fantastic. They all just come rolling in now, so that's good that we can hear us. You can ask some general questions around technical analysis. We really want to focus on technical analysis on this show. It's just because it's our thing for this show on Tuesdays at lunchtime. And then obviously we're here to analyze your tickers or your companies that you want us to look at from a technical perspective, how to read the price charts. Maybe that's a better way of saying it if you're not really familiar with the terms of technical analysis, right? So how to read those price charts. Jason, are you okay now? Are you ready to go?
I'm okay. I'm good. Just see how our internet connection goes, whether that's good. But so far, so good.
That's good to hear. Good to hear, Jace. Do you want to show, before we get going, do you want to show us the disclaimer?
Yep. No, of course, everything we do today is general commentary only, so there's no personal advice, and this just outlines all of that. And the other thing to note is I'm not part of Selfwealth. I'm from Motion Trader. That's my business. So my details are in the top section, licensing, etc. Selfwealth is below all that. And so once we understand it's general commentary, we're all ready to go.
All right, fantastic. Jason, it's been as I look at the markets this morning and the last few days, it seems to be really not going very far at the moment. So there's to be a lot of consolidation going. What's your thoughts? Let's have a look at the AU market to start off with, eh? And as I said that, we've just lost him again. I can see it's going to be one of those days, right? So what we might do while we're waiting for Jason, as he's popping up very soon, he's been restarted, is I might talk about some of the questions that we get in regards to the platform. All right. So a lot of the times we might get, do we offer other markets from, other than Hong Kong, US? I don't know. At this point, we probably won't offer too much more at this point. And the reason being is because it's just the demand. We don't have a lot of demand. We might have a few requests here for some of the European markets and the Canadian markets, but we don't have a lot of demand, right? So at this point, it's always going to be the Australian, the US, and a Hong Kong market, all right? Another question is generally around stop losses, all right? Stop losses are... these are the things that, and when people come in and ask, do we offer stop losses? Yes, we offer stop losses. However, it's one of those things where you've got to sort of understand how a stop loss works, right? Sorry, Jason, are you there now? No, he's still looking. So let me just talk quickly about stop losses.
Hey, Rog,
Some people
I'm trying
come
to
in.
back a sec.
No audio. That's okay.
So
I'm going to
this is the
explain
fun
to
of trying to do
the
things
lovely
live.
crowd
It's great
here
when it all
about
works.
stop. Yep.
Okay, I should be able to hear you now.
Yep.
Excellent.
Yep.
So viewers, just bear with me. I'm going to get our charts back on.
That's okay. I'm going to continue on going down my track, Jason. If you can hear me, I'm going to go keep on down my track, but it's going to be relevant to what I'm just going to be talking about, right? Stop losses.
Go.
Yep, stop losses. What I wanted to talk about is stop losses and how important it is to sort of understand on our platform how we can use them when we talk about stop losses with Jason, right? So on our platform, you can actually have a stop loss which triggers if the price just goes and touches the actual price, right? So what that will do then is it will trigger the order in the market, right? A lot of people will have this confusion saying, hey, a stop loss has been triggered. Why hasn't my order gone through? Now, for most stocks, obviously, your order will go through, and generally, if it's at market, it will get filled. But if you put a limit on that pending order and that the liquidity isn't there on the other side, then your order might just sit there and waiting for the liquidity on the other side of on the buy side, right? Because you're obviously trying to sell with a stop loss. If the liquidity is not there, your order will just sit there waiting until the market gets the price that you want and the liquidity is there. All right. So I thought I'd just answer some very frequently asked questions around our platform, Jason, while I was waiting for you. They're the two main ones, and I think the one of the ones is with the markets, because the AU and the US markets are the ones that are booming, and now the Hong Kong market's starting to boom. And as we see the Hong Kong market starting to boom, all of a sudden our volumes are starting to go up as well, right? So in terms of trading, but at the same time, stop losses, when it comes to managing risks, I think it's a really important thing that we've got on our platform. I think it's a really good feature and functionality to have on our platform to have that, but you've still got to be able to manage those stop loss. They're not just completely set and forget, right? So
yeah, you're right. A stop loss needs to be managed. You can't just put it in and just assume that everything's going to sort itself out. Sometimes markets gap lower and they go below a stop loss, and you have to have your stop loss set so it can deal with those. And just coming across and just looking at everything periodically, making sure it's all in order. But so we should, now I've got everything hooked up again, maybe we should get into those charts.
Well, let's have a look at the AU market to start with. Let's go for it.
Right. So, so you're saying the ASX 200 has been reasonably quiet, and it has been. It's been a fairly quiet week for the ASX 200, and I think that is a good thing, Rog. I think it's positive that the market is having a consolidation, and I also think it's positive that it's been holding on to these recent gains off the September low. And you just look at this rally from the September low, and what I think is good there is I think this has been what I'd call an impulsive rally. So an impulsive rally is where the buying pressure and the upward momentum is strong. And then you look at the pauses along the way, and you see the pauses are just shallow, and they overlap a lot. So they're quite corrective in the way they look. They're shallow and choppy. And if you just look at the last week, and that is exactly what the last week's price action has been, shallow and choppy. And this is often a sign of a temporary pause in an underlying trend. So you got the underlying trend with momentum, and then you get the pauses without much momentum. And that's where we can say it looks like it's a temporary resting point before the potential for more gains as we go forward. Now, just looking at this chart, we can add in a support zone, a short-term support zone. And let me just, you can see these highs and these lows we've recently had, and you can see they're kind of pretty much in line. So when you get that, that's where a support line forms, or a resistance if it's on the other side if it's on the top side, we're putting in resistance. But at this point, it's support. So you can see this one's overshot a little bit, but that will happen. These things don't have to be, well, they're often not textbook perfect, but you can see there's a general area of support resistance coming through along this line around 8,100. So that's the market to watch in the near term. We've also got the 50-day moving average coming up beneath that. I think there's still scope for some more consolidation, maybe over the next week or two. But overall, this remains. I think the structure remains bullish. We've got this rising upward trend with the rising moving averages, the 50, 100-day moving averages. I think that all remains positive. I want to jump over, have a quick look at the equal weight. So I like having a look at the ASX 200 on an equal weight basis as well. And so this is it here, equal weight. And this chart interests me the most at the moment because what it does, like when we look at the ASX 200, it's market capitalization based. So the biggest stock is going to have the most influence, and the biggest stock is BHP. It's about 10% of the index. So what BHP does, it will have that oversized influence. When you look at an equal weight chart of the ASX 200, the bigger stock and the smaller stock in that top 200 have the same influence. So it gives you an idea of what the underlying market is doing without the distortion of what the influence those bigger stocks are having. And what I like about the equal weight is that it's been holding its gains from the recent rally. So we have this breakout. Had this breakout a couple of weeks ago. This big 6-month trading range. Prices broke higher, and just in the last couple of weeks, they've been holding onto these gains. So like look at the strength of this rally off the September low, strong rally, and we're just getting a sideways consolidation at this point. So I think that's positive. And just looking at the last few days, it hasn't given much of those gains back either. So I think this suggests there's buying interest on the pullbacks. And as I was saying with the ASX 200, I think there's scope for more consolidation. The strength of the rally, it has elevated the price above the 50-day moving average. And when that happens, you often get some sort of a pause, maybe some sort of a sideways movement while the moving averages catch up. I want to watch I'm interested to see what this pullback looks like should it continue to develop. I think to keep the bullish structure looking strong, would want to see price holding above this previous trading range. So we had the breakout from the range in late September. So holding above this breakout point, I think that would be an important sign for keeping this structure looking positive. And maybe we're going to get a couple of ways a consolidation could play out. Looking at these examples from back here, back in January, had a strong run, and then we had a zigzag pullback to the moving averages. And then in February, we had more of a sideways consolidation. So either of these two scenarios could fit into the next few weeks. But I think overall that price action looks encouraging. Just coming back to the ASX 200, I think it's still a case of a bullish structure with price above rising moving averages. I think the play continues to be approaching the market from the long side. There's nothing telling us we should be deviating from that path at this time. And as always, I use those wide trailing stops on my positions. And I use the wide stops because firstly, I want to see off consolidations and these pullbacks, which we periodically get. The wide stops help see those off. But also at some point, the trend does change. We don't know when that's going to be. It could be soon. It could be many months into the future. But ultimately, trends change, and we need to have I think we want to have a mechanism to then take capital out of the market and de-risk our portfolios. And I think a trailing stop does a really good job at achieving that objective.
Yeah, actually, we might quickly talk about at the end, if we've got some time, continuing on that track of when I was talking about stop losses and how do you potentially use them on the platform later on, especially because I know you don't put in physical stop loss on the system. You'll always put them in the day after, but there's a couple of options which you could do there, right? So just to let the viewers know. All right, no worries, but let's go on to so ASX is looking good. Let's get on to the American markets there. Let's get on to S&P 500.
So here's the S&P 500. And so it's so September. September's one of those notorious months. I think it's probably the September and October. There's a thing about September, October. We often hear they're the crash months, bad things happen. And here we go. We're now we're through September, and we're through that notoriously weak month. And so far, so good. Market is just sitting below its all-time high. And this is the thing with seasonality. So we'll often hear these things. We hear things like sell in May and go away, and be careful in September and October. They're an interesting historic reference point to some things that have happened in previous times, but I don't think they're particularly helpful when it comes to managing our portfolios in real time. I think the best thing we can do, we can look at the price structure as it stands rather than looking at the calendar and going, well, okay, it's this certain time, something particular should happen. Sometimes they do, often they don't. So where does this leave us with the S&P 500 now? Well, I think looking at this structure, as I've been saying for many months now, we've got these rising moving averages, the 50-day moving average, the 100-day moving average. They remain in upward trending phases. And we've also got a series of higher highs and higher lows as we progress up through this trend. And they're all definitions of bullish price action. So that all remains the case. There's always room for pauses and consolidations. We're getting one of those consolidations at the moment. It was really interesting. I turned on the news this morning, and they got to the finance section, and it was, the Dow's off 400 points overnight. So you hear that. A lot of people, I think, probably hear that Dow's off 400 points and go, oh no, that's probably not good. But when you actually put it into the perspective of the chart, this is the S&P 500, not the Dow. We'll jump over to the Dow quickly. There's our 400-point drop in the Dow. When you put it in the perspective of the surrounding price action, it's just noise. It's noise within the overall trend. So you've got to put these numbers you often hear in the media into the context of what else is going on. So that 400-point drop, it's just within the range of the last week. So really nothing to see there at this point. At this stage, I don't think there's anything here that suggests that we should change the game plan from being long equities. Long equities has been what's been working for over a year now, and there's no sign of that changing at this stage. Like we did with the ASX 200, I'd also want to have a look at the equal weight. So, of course, this is market cap based, so it's all NVIDIA, Apple, and Microsoft. They're the three big drivers there. I think they make up about a quarter of the index, just those three stocks. So it's always interesting to look at the equal weight, see what's happening there, like when we rank those 500 stocks equally. And I think this is a really nice looking chart, and it does remove the dominance of those big cap companies. And I think it does a better job at helping us understand how the broader market is tracking. And this continues to show the characteristics of an unfolding bull market. Series of higher highs and higher lows as we progress up the chart. Also, those rising moving averages we've spoken about with the ASX 200 and the S&P 500. Unlike the S&P 500, this isn't dominated by those few big stocks up the top of the index. I think the trend in the equal weight, what I think the trend that we're seeing here in the equal weight is doing, I think it's telling us there's broad participation in this rally. And I think broad participation is one of those key factors in a healthy bull market. So, yeah, I think that's all. I think this is a market which continues to do the right things.
Fantastic. Hong Kong, we can talk positively about that as well still. All right.
Well, yeah, more strength in the Hong Kong market over the last week. So where were we talking last week? Here's where we were last week, and so it's continued upwards from there. And last week I thought this market is starting to get stretched above the moving averages, and this week it's run even even further. So it just goes to show that a situation can always get more extreme. Just when you think something's sold off so far or it's rallied so far it can't go any further, the market will often take things up another notch. It's interesting to look how far above the moving averages this market actually is. So I'm going to put on an indicator. So this indicator measures the current market price above the 50-day moving average. And I'm going to, we can just see like on a daily basis how high, how far it is above the, it's about 25% above the moving average, 50-day moving average at the moment. I can just compress this chart and you can see it doesn't often get that high. And now just jump over to a weekly chart. So this will be looking at a 50-week moving average. And again, to see the extent that this rally has gone. Now let's just run a line across here from current levels. And you can see this goes back to 1987. It's seldom does the Hang Seng get about 30% above its 50-week moving average. It's only happened a handful of times. And on each of those occasions, it's typically been close to some period of consolidation. So that's just something to bear in mind with like is this going to keep rising at the rate that it currently is? Probably not, based on like how things have behaved in the past. It is at quite an elevated level. Just coming back to the daily chart. So look, I've missed this initial run, but when I look at this now from a risk management perspective, I think it's just too late to jump on board now. I'd rather wait for the next consolidation and then consider it then. But the next consolidation, it could be like that could take quite a while to play itself out. So it's been a fabulous run, but it's just I've found this a hard run to get, and I find it a hard one to jump on board now, given that it's so stretched. Same thing goes for China when we look at that. I've underestimated the strength of this rally. I thought last week that maybe it had done enough, maybe it was going to pause, and that could create an opportunity, but that didn't happen. It's continued higher. It's carved straight through this overhead resistance. Let me just compress this so you can see where this resistance come from. You can see this big region around 14,800 thereabouts takes in all these previous highs and lows. So quite a strong resistance point, and the market has just gone straight through it. I find these reversals really hard to catch where they're so sharp. Either you need to preempt the low, which I don't do. I don't like preempting lows because you get it wrong many more times than you get it right. Or you got to be very quick to buy the initial surge. The problem with buying the initial surge is how do you separate it from like the surges which you get in a downward trend that just quickly spike higher and then come back down. So I find this a really difficult move to catch, and you rarely see them as well. So look, I just accept that I'm not going to catch a move like that. And for me now, I think it's really a case of watching from the sidelines now and seeing how this unfolds.
Yeah, all right. Well, there is a surge there nonetheless. So if anyone is interested in letting us know some companies in Hong Kong they would like us to look at, because the actual company charts might be different to the overall market, then let us know in the chat. And that's all we're here for, not just AU or even US stocks. We can have a look at those Hong Kong ones as well, right? So, all right. Good to see. There's a couple of questions here which we might get into first. As an active investor, how much focus should we pay on fundamental analysis of a company and other market news, and how much does that play a part in technical analysis?
It's an interesting question without a black or white answer. It really depends what you like. I don't pay much attention at all to the fundamentals. A lot of technical traders won't. They'll just focus on the price action, because the price action will incorporate everything that's going on in the fundamentals. So everyone who's buying and selling and all the fundamentals they look at, it's all incorporated within the price action. And I'm looking for stocks where there's momentum, and then I can manage risk around that momentum, and I can let profits in a momentum-based stock run. It doesn't really matter to me what's going on inside the company. That said, there are other people who are purely fundamental and won't look at technicals. I really find that a strange proposition for someone to completely ignore the technicals. It's a bit like, if you fundamentals are great, but I think you do want to see what's the price doing? Is price generally moving down or generally moving up? So even though a stock might have wonderful fundamentals, if the price is continuing to move down, I've just got to be wary of that sort of situation. So I think understanding price is a really integral part of navigating markets. There's a combined approach which can work really well. I know people who will use price analysis to identify areas of interest, and then they might then use fundamentals to drill down on the company and zero in on the companies which they think have the highest prospects. So that can be a way to do it, but it really does vary, and there's no right or wrong. You can be all technical, you can be all fundamental, you can be combined. It's about having a consistent process that is repeatable, that you build a systematic approach around whatever it is that you're doing, and then you consistently follow that. And when you're consistently following something which is robust, I think that's where you can have success over time, as opposed to hit and miss of like, I've had a win, I've had a loss, I don't really know what the big drivers were. It really becomes an unrepeatable approach. We want the opposite. We want repeatable. And so working out what works for you. Do you want to incorporate fundamentals or not? It's an individual decision.
Yeah, I remember watching a previous video on our Selfwealth Live with our previous analyst, Owen Rask, actually. And he showed a really good, in my eyes, was not that I follow it because I'm not really a fundamental person. It was a really good way to be able to evaluate the fundamentals of a company with like a checklist, and it might have a scoring system saying, is the company profiting? Has the company got debt? A few different sort of variables in any company would have, and you could find that public information, obviously. And if you had a score of over, I don't know the exact system, but if you had a score of over, 4 out of 5, then that might be a company worth looking at for your portfolio, right? So it was kind of a technical way of looking at the fundamentals versus just looking at a company report and going, oh yeah, this looks like a good company, I might invest in it based on that, right? It was a score-based system, so I thought that was a pretty cool thing. I'm not sure if you've seen it.
So it's systematic. It's a systematic approach.
Exactly. Yeah.
It's not just going, oh well, I'll read this page, what do you think? It's like it's a checklist, and I like checklist approaches. So you think of how like a pilot flies a plane. There's a whole checklist of things they go through before you have takeoff. It should be no different or before you have landing, for that instance. It should be no different when we manage our share portfolio. We should have a checklist which determines whether we should enter and then how we should sell. It's also can also be rules based, as opposed to gut feel and I think it's gone far enough, or whatever it may be. It's follow your rules, follow your process, make it repeatable, and if it's a robust process, you just keep doing it, and that also can give you the confidence to work your way through those periods like 2022 where we get a sideways to down market. It's like, well, I know my rules, I know what to do. I don't know what the market's going to do next, but when I get my checklist, I get all the ticks I need, and I know what I'm going to do.
Yep, and obviously that checklist should also include going on to that conversation around stop losses, right? How to get out, as you just said, right? So I know I actually think it's a really good part of our platform, and I've used them a lot over the last 2 years. The ability to see if a stock is heading towards my ATR stop loss, which we talk about quite a lot, heading towards it. I'm not one of those people that sort of waits for the next day to do it. And if I'm not around, especially because I'm working as well, I might not put that time in at that point. I will, if it's heading down towards it, I'll put that stop loss in the system. If it taps it, it'll trigger, it'll be put it in. I'll know it's in because we get notifications around it, right? So I can manage it after that, but I also know I can manage it. And I know you do it the opposite way, right? Jason, you probably do it the next day, do it the following day. Is that right?
I tend to. I'd look at what stocks have hit exits at the end of the day when I run the data, when I run the closing data through the algorithms which sit behind the system, or the rules based operating of the system, and I'll see what stocks have exited. Often no stocks have exited, so I don't. It's not like I'm exiting stocks every day. It could be weeks before I have an exit, but I'll see what stocks hit an exit, and I'll sell it. I usually sell it the next day or soon after. I think if you're using like a leveraged product like a CFD or a futures, when I've traded those in past times, it's always been a case of having a live stop loss, because leveraged positions can get out of control quickly. As part of what I'm doing now, it's an unleveraged portfolio, and it's a portfolio of many relatively small trades. So I find I have more time to do the exit. So that's why I'm not so fussed about having the live stop loss. But there's nothing at all wrong with having the live stop loss. And a lot of people tell me they like the live stop loss because it enforces discipline. So sometimes I'll say, look, if I don't have the live stop loss, I'll say, oh, look, it's hit the stop loss, but I'll give it a little bit longer, because they've got that hesitation to lock in to maybe take a loss, or close out a profitable position at a lower price. But if they instill that discipline of putting in the stop loss, well, then the trade's done for them. They get the notification, and it avoids that temptation to tinker with the exit, which sometimes can prove costly.
Yeah, and once again, the beauty of it is if share trading is not your full-time thing, it does allow for that capital, risk management, right, and being able to preserve capital, as we speak about all the time. And often what happens is, because I know it's coming towards that, it might not actually hit it on the day. Often might happen a rebound just before it, right? So I can always come the next day and I can manage it from there, right? I can cancel it if it's going the opposite way after that. Right? So it's actually a really cool function on our platform. All right, if you don't know anywhere, please explore the stop loss function there. All right, so let's have a look at some of the tickers that have come through. Then let's start off with, if we can, Jason, FND, please. Oh, sorry. Let's start with BHP. BHP and Woodside, the two.
Right. Okay.
The two miners.
So BHP staged a really impressive turnaround, and of course, it's all tied in with this rally we're seeing in the Chinese market, and hopes for like a big stimulus package to come into the Chinese economy. We've gone from below the moving averages to above. Often when we get these quick turnarounds from below to above, you get a period of consolidation, and that can set up a buying opportunity. And that's kind of what I was looking for in China and Hong Kong last week. Some sort of a pause following the initial crossing of the moving average. We didn't get that. That just continued straight on up. BHP is showing more sign that it is starting to pause over the last week. I'm just thinking as I'm looking this, like my preference is probably just to continue just to wait a little bit. I'd like to see what the consolidation looks like, but let me just measure something out. So there's the current price. Like A position could be purchased at current levels, and a stop could be placed about 10% lower. That'd be below the 100-day moving average and back below this support resistance region at around 42.20. So a couple of ways BHP could be played. So now prices above the moving averages, I start to look at this from a positive perspective. It's like it could be bought at current levels with that 10% stop, or it could be, or someone could wait, just see how this price action plays out. Do we get a sideways period while the moving averages catch up? I think it's probably run most of its gains in the near term. I think it does need to pause and do a little bit of work. But if someone was worried about missing it, yeah, the option is to buy it now. Of course, it may not even work out. This whole rally may fizzle and it could come back down. But that's why we use a stop loss, maybe about 10% lower. But it's one which has been tracking sideways for a couple of years now. I'd probably have a bias towards it ultimately breaks to the top side and we get new all-time highs. So yeah, I'm looking at BHP favourably, and Woodside was the other one. And look, the downtrend is still in place. It's still below these declining moving averages. It's had a rebound off the low, but it's still in a downtrend. So what makes this current point in price different to this previous retest of the moving average, or the time before that, or the time before that, or the time before that? Like on each of those occasions, you could have said, look, it's had a good rebound off the low. It's the turnaround's in place, and but they all failed. So I don't know whether this one's going to fail or whether this is the actual turnaround. We just do not know. For me, it's a little bit early. I'd like to see. I'd like to see it hold on. Well, first hold on to these gains, maybe stabilise, move sideways for a bit, let these moving averages start to turn higher. I'd be inclined, just give this one more time. There's, unlike BHP, which has gone from one side of the moving averages to the other, this one's again stopped at its 100-day moving average. Oil price has also been inconsistent with it. It's not trending at the moment. It's within the bounds of a large range, and we can just quickly jump to the oil price since we're talking about this. Let me just scroll down to oil. So oil's been an interesting one. 18 months it's been in this big sideways range. Broke to the downside about a month ago, but the break to the downside brought it straight on top of this large support region. So it always made that breakdown a little bit dubious, and the possibility of a false break, which is now looking like, well, it looks like a false break to the downside. So it's rallied back within the range. So we don't have a breakout to the top side. We just got oil back within the range. It's being driven a lot by what's going on over in the Middle East and in that region at the moment. So we don't have a trend there, and Woodside is still technically in the downtrend. So that's why I'd leave Woodside alone for the moment and just see how this price action develops.
All right, fantastic. Let's go on to FND, please. N for Nelly, FN.
Yeah, well, this uptrend remains very much intact. So yeah, nice rally off the moving averages. Now we're getting the pause, the sideways consolidation. Moving averages are catching up. If I had this in my portfolio, I'd continue holding it. Would I buy it here? Like if someone was looking to buy this stock, this is a pause in the trend, the consolidation, which could be the buying opportunity back towards the moving averages. May still have some more time traveling sideways, just a bit more consolidation. It's kind of breaking out of, you can sort of see a bit of a larger range, which it's just recently come out of. You've got that triangle range, so nice rally to the highs. then we've got the sideways consolidation, we've got the breakout, and now we're consolidating that breakout. So it's potentially like a buying point here. Stop loss could be just back down here within the range, maybe back down to the 100-day moving average. Upside targets, well, look, I don't know about, like, I don't use upside targets, but just looking at where it's been in the past, it's been at higher levels. I think there's certainly further upside potential there. So if it's in the portfolio, I'd be calling it a hold. If I liked it for whatever reason, this could be opportunity to buy some with that stop below the 100-day moving average.
All right, BVS.
Let me just compress this and see where it's come from. So yeah, so this big downward trending phase. I had this in my portfolio a little while ago. It was during this pullback. This pullback just got a little bit too big and triggered my stop. And this will happen. We'll be in stocks which are trending higher. Their pullbacks will be bigger than our stops can withstand, and we lose them the portfolio, and then they turn and they go higher. And then someone might say, well, look, why bother using a trailing stop? I should just hold. What I always say to that is, it's not the ones that rebound after you sell that cause you the problems. It's the ones that continue falling and you don't sell, which cause you the problem. So, sometimes like this, I miss a few. They come back, trigger the stop, and they rally, and that's okay. There'll be other stocks which trend for longer before coming back. Looking at this one now, like I think there was a buying opportunity. Like, it stabilized, didn't spend too much time below the moving averages before getting back above. Looks like you can see this consolidation just through here recently, just during September, just brought it back to the moving averages as rallying again. That could have been a buy if someone has bought this rebound. I think it'd be a hold. There is momentum with this stock at the moment, and for buying, I'm just thinking from terms of buying it. This momentum could continue up for some time. It does have a structure that could deliver a nice upward trend. I'm just wondering about managing the risk around an entry point at current levels, and getting back below the 100-day moving average, looking at like around 22%. So it's getting to the upper limits of where I'd probably have a stop loss. But yeah, look, someone could buy around current levels if they're prepared to have that stop below the 100-day moving average. But if somebody's already in, by all means, I'd be letting it run.
Fantastic. What I like about your analysis, Jason, is when we scroll out and you actually tell the story a little bit of the chart. I really like that, to be honest. It actually helps people. I think it helps me when I'm looking at charts. I do a similar thing in my own head, and I try and tell the story and see how it's going to play out a little bit. So how it's played out in history, how it potentially could. So very good.
I think you need to step back. Like, a lot of default charts, if you go to a charting site, like you go to YouTube chart, not YouTube, Yahoo charts or something like that, the default might be set on 3 months, or some cases a year. Like, if you get 3 months, if that's all you get, like what does that tell you? It doesn't tell you very much. Like, you got to put it into perspective. Even like looking at a year, it's telling you a bit more. But is this all-time highs, or is this just coming off the lows? We don't know. It's only when you step back and you take in the whole picture that you can put the context around the current price action. I think that's helpful. I like looking at situations where a stock has been in these downtrends and they start to form a base and start to turn higher, because you can see the recovery potential in them, that they could potentially, like, you can say, look, this is an asymmetric situation in that could this trade back up towards $4 and beyond? Yeah, absolutely. And you can manage risk around it because you know where your stop losses are. So yeah, I think always step back, take in the whole picture, and then come in and look at the finer points about, okay, where are the moving averages now? Where's the price now? You know where it fits in the bigger scheme of things.
Yeah, yeah. And you're absolutely right about the platform thing as well. So it's not just Yahoo and Google and these online. It's even with our platform, you know, whether it's on the mobile. When I look at companies on the mobile, for instance, and it's on the desktop as well, it'll only show you maybe a 5-day picture. And if that's all you're looking at is 5 days, you're not really looking at the price chart as you should in the whole picture, right? So it's a very good point that we bring up. So just be aware of the platform you're looking at, right? Okay, so let's have not to say that you can actually go 2-3, you can go longer, obviously, just change the setting, right? Okay, there's a question. Any thoughts on VST? I entered the trade at 65 on a 3 swing set, up at stop loss at 112 at the moment.
What was that code again?
VST.
BST.
V for vase.
VST. Do I have the right code there, Rog? VST?
You should be. Maybe it's the Vista VST. Yeah. Any thoughts on VST?
No, well, you're talking about $1.12. This is
No. He entered at 65. Brian entered at 65.
okay.
Yep, entered at 65, and it's about 112 at the moment. Oh no, stop loss is at 112 at the moment. So obviously he's probably still in it, but he's marked the stop loss at 112. So
right. Okay. Well, uptrends in place. If I had this stock, I'd continue holding the stock. So in at 65. So it's interesting. So in at 65, to still be in it, he's had to sit through. Had to sit through a 30% pullback there. Let me see. What's the stop at 112? Okay, the stop loss is now about 20%. So it looks like the stop loss has been tightened a bit. Look, my only comment on this would be on the stop is the stop a little bit tight, because it stops above the 50-day moving average, and we know these stocks do periodically come back to the 50-day moving average. But look, generally speaking, it's a 112 stop loss. It is giving the stock room to move around. It's giving it room to move around. Whether it's enough room, considering the strength of that recent rally, and it's how far stretched it is above the 50-day moving average, that would be my only thing I'd think about there. But I think he's done the right thing. He's letting a winning position run, and you ask yourself, look, how have I got myself in this position of having a nice profitable position, and it's through letting a profit run and resisting the urge to take a quick profit when that was happening earlier on. And I like the discipline of having that predetermined exit point, saying, look, I'm going to give it room, but I'm not going to give it forever to work out. Well done.
Okay, all right. Let's have a look at SRG, please.
Nice uptrend. Yeah, it's been an uptrend for a while. There's been a bit of an acceleration in the trend over the last month or so. Look, I'd be if I was in it, I'd be absolutely letting this run. Wide trailing stop. I don't think I probably wouldn't be buying now. Just like I was talking about, like, is the ASX going to do some consolidation in the near term? But the structure's good. So really, the structure's good. If somebody wanted to buy this stock, a stop could be 14% lower below the 50-day moving average, and maybe this trend continues up. We never know how far a stock is going to trend. This could double and double again, or it could peak, or it could have already peaked. We don't know. So it's a case of letting something work whilst it's working. At the moment, this is working. So if I had a position, I'd be keeping. I'd let it keep working. If I wanted to get a position in this stock for whatever reason, I guess it could be bought at current levels, because you can see the risk can be managed. That's the key for me. Can I manage the risk? What's my risk? If I've got to have a 50% stop loss because it's so stretched above its averages, it doesn't work. It's not what I'd call an asymmetric entry point. But if I can say, look, I can justify 15% because it has the potential to double from here, well, then maybe there's still a case for buying.
All right, and then there was SGR, I think.
Yeah, well, this has been a disaster, this stock. So look, I certainly wouldn't be buying it, and I wouldn't have it because it's been in a downtrend for several years. There's been ample time to have cut a losing position and just put it to the side. And it's interesting about like people wanting to buy lows, and like you look at all these temporary, all these rallies, and some of these rallies are they're decent rallies. So if you get the low point, like that's a 30% rally just here. So they have decent rallies along the way, but and this is my issue with Woodside at the moment. Woodside's still traveling below declining moving averages. I'm not suggesting Woodside's going to do what Star's done, but nonetheless, it's below declining moving averages, and we don't know when they're going to bottom. For some reason, the stock, look at what it did in August 23. It spiked high. So there's some news out. People got excited. Maybe this is a turning point. Maybe the low's in. And then here we go again. Down it goes. I was looking at the substantial shareholder notices in Star last week, and a large fund was accumulating. They had put out 2 substantial shareholder notices. I think it was this year. So during what they must have thought was maybe a basing period, or they probably didn't think it was a basing period. They probably weren't looking at the chart. They were probably like looking at the balance sheet and going, look, we see value here. But for me, I couldn't buy it at that point because we didn't have the momentum. We could have said, look, maybe there's a base forming, but we don't really have a breakout. The moving averages haven't turned higher. And lo and behold, there we go. We get another fall to the downside. Maybe that's the low. Maybe it's not. Like trying to call the low now would be like trying to call any of these other points the low, and they didn't work out. Like the Chinese market, this is why I find like if this does shoot higher from here, it's like, well, I'm going to miss it because I don't get those sharp turnarounds. They're really hard to get because you got to preempt a low point. So for me, I just leave this one alone, and I don't think this is the place to be.
All right, STP.
STP. The trend in this one is still in place. This has been a really unexpected winner. Like, it's a clothing orientated company, and its uptrend started during a difficult phase in the market during mid 2023. The market wasn't rising at that point, and this stock started to rise. And the momentums continue upwards. It's a motion trader stock. It's been in the motion trader portfolio since back August 23, thereabouts, I think. Wide trailing stop saw off the pullback in June. It's still in the portfolio. It's traveling along these moving averages at the moment. It's at an interesting point. Is it going to rally off these moving averages and go for another run higher, or is it starting to lose a bit of that momentum and start to get a bit of a rolling top to it? I don't know at this stage. I'd be giving it. I think I've actually got some of this in my portfolio, so I'm giving it the benefit of the doubt that it can continue upwards. But if it starts to break below these lows. So we've got a low here in late September, another low from early September. Starts to break below those September lows, below the 100-day moving average. Well, then I'll be wondering, well, is there like a larger consolidation, maybe back to the May low, or a trend change in place? I probably wouldn't be buying this one at the moment. If look, one play would be buy it at current levels and have a tight stop loss just below the September lows. That could be done. So you're still going with the overall momentum, and you've got relatively small risk on it. Alternatively, buy a break of the September high and see if this rally continues. But it's been a good trending stock.
All right. Kirby suggests can slim. If you're interested in a framework around I guess fundamental analysis. So I've never heard of that before. If you're an O'Neill fan as well, so Google that if you want to have a look at that. Have a look in the comments what I'm referring to there.
I've heard can slim before. There's a well-known. I think he's a technical fundamental guy from earlier times. I haven't spent much time looking at it, but he's a well-regarded guy. So yeah, it's worth having a look at it if you like to incorporate a bit of fundamental analysis.
I might do so now. Thanks, Kirby, for adding more homework to my list. I've got Shannon has said I use an 8 ATR as a trailing stop in the case of CETF. So let's look at CETF. Is it better to use the ATR when I bought the stock in April, or the current ATR, which has been quite stretched?
So bought in April. So that's where we were talking positively about the Chinese market in April. This is a sort of turnaround which I prefer to play, where you go from below the moving averages to above, rally into the averages cross, and you get a breakout. And at this stage, we're quite positive on the Chinese and Hong Kong markets. Then it started to stall and get below the moving averages, and the moving averages turned to the downside. And that's where I've said, look, it's now in a vulnerable structure. Let's leave it alone. And which was a shame. It couldn't hold that positive setup a little bit longer. It sagged so much because it's turned out to a really nice, really strong rally. So yeah, look, nice entry in April. The thing with the ATR stop is is adjusting for volatility. So I think the proper way to use an ATR stop is to use the current data. I don't think you can use whatever the trailing stop would have been back in April, because you can see the trading ranges are quite narrow back at that point. Now they're quite wide, so it's going to be a much wider trailing stop as a result. So the average ATR is the average true range, which is effectively the average range. So say the average range is $1, and you times it by a multiple of in this case 8, and that gives you the width of your trailing stop. So you can see the ranges narrow, ranges are wide, so the width is going to be a lot greater. And this is the thing with the market, which is so volatile, that the stop is going to be a long way away. The stop's probably going to be back below the 100-day moving average. So you really, you risk giving a lot of the rally back, if not all the rally back, for the chance of staying on a much larger rally. If you set a close stop, you probably get stopped out just in the noise, and then you don't get that opportunity of staying on board after a good entry point. So I think it's about know your process, have your rules around your process, and just stick with it.
Right.
Yeah, I think that's the best we can say there.
Yep. Okay. Well, let's have a look at a couple of Hong Kong stocks then we've got here. So we've got obviously the big ones here, Alibaba.
What's the code for that?
Well, let's type in Alibaba and let's see what comes up, because I don't know, to be honest. It's because Hong Kong stocks always got the numbers, right?
So here it is. Yeah, I've got it.
Yep. No. And you on the platform, on our platform, Selfwealth, you can either type the number or the name of the company, right? If you want to find it.
Yeah. This. It's. That's good. It's been a nice transition from a bottoming phase into a trend. So we can see how it's gone from being below the averages to above. Had a bit of a false start in May. I remember speaking about this on my weekly strategy sessions in May, talking about how it looked like it was. I spoke about it here. I was talking about how it was starting to look like it was starting to get some momentum up, but then it was a false start, came back down, need to do some more work, and it's done that and started to regain momentum again. And this has been more of a building momentum than what we saw in the index itself, which just went straight higher. In that the market's got to the right side of the moving averages, traded gradually higher, then along the moving average, you've got a little bit of a sideways consolidation there, and then we've got a breakout. So this was a much more tradable situation, and I've had a nice rally since. If anyone bought Alibaba, yeah, I'd be holding this position, see where it goes. In terms of buying it, well, yeah, the same comments go. It is stretched at the moment. I'd wait and see whether a consolidation develops and see if it's a tradable consolidation and consider an entry point from that stage maybe. But for now, if someone's in, yeah, I'd be letting it run, wide trailing stop.
I'll tell you what, whenever I see these retail stocks, especially this one being an online one, and I don't know how much Australia has to do with the share price here, but when it comes to cost of living, we're certainly spending a lot of money on stuff, right? So it's driving these prices up. But I guess this is all relevant to the China, this latest China stimulus, right? But yeah, I think it's all interesting. 10 cent. And with the one. Yep.
Yeah, this is a lovely little consolidation here. Let me just step back a little bit first. Yeah, like this has been a nice developing trend. You can see we've got this period below the averages, back above the averages. The averages turned, and we got a breakout. So for my entry criteria, probably somewhere around April would have been an entry trigger. And then we got that initial rally. We've got the consolidation into the averages, which I like when we get that. And then we can see we've got another breakout in September, just at the towards the end of September. So a couple of entry opportunities in this stock. If someone's in it, I'd certainly be letting it run. If not in it, see what the next consolidation looks like. Does it give us an entry in? But this is a really nice pattern to look for. If you're watching stocks and you see a stock move in this sort of sideways pattern, they're often nice entry points. They're often a precursor to another upward phase, and sure enough, on this occasion, that's been the case.
All right. There's one more from Hong Kong there. It's 1810 is the number. Xiaomi.
Yeah, again, nice trend in place. It was a more tradable situation than the index, because we had this period where we went from below the averages to above. We got the sideways move back towards the averages, and then we started to get a tradable breakout late September. So yeah, the trend is up. Again, it's stretched. Not a buyer here. I'd be looking for the next consolidation, see what it looks like. But you can see after these big runs, the consolidations can last weeks or several months, and they can give back a bit of ground. Same thing we saw here. It's the consolidations do come. Sometimes people see these sharp moves and FOMO comes in. I don't want to miss out. I'll just pay up. But then the peak does come, and they've got to sit through 3 months of sideways drift to lower. You can almost be certain the same thing's going to happen to these boom stocks at the moment. There is going to be some sort of payback where the trend pauses. we just don't know when, and we don't know how long or how far they pull back. But this is where we think about like how we're going to manage our risk around an entry point. Are we comfortable with the prospect of a larger pullback at some point? So and that risk can be managed, but it just needs to be considered and recognise that it's a likely event at some point.
All right. There's another one here, BYD, which I see. Is this? I think it's the cars. I'm assuming because I see them everywhere on the. Oh, maybe not. I see them everywhere on the road. BYD in Hong Kong. Is this the car company? I'm just curious.
Not as much data on this one. It's really been going sideways since its listing in 2021. But maybe this is it. Maybe this breaks it out of this broad sideways range it's been in. Same comments as those other stocks. We've got that initial run. This was a harder one to get on, probably. But yeah, look, if someone's in it, I'd be staying in it for now. My stop would be back down here around the 50-day moving average. So I risk giving much of that recent move back for the prospect of staying on a much larger trend should that develop. And yeah, if I'm not in, I'm looking for that next consolidation to consider it.
All right, we've got quite a few stocks here from people, Jason. So I might just do one from each person at this point. So we'll go. Elizabeth says MSB. These.
Trend is up. It's just come out of this period of consolidation. Don't think it's a buy at current levels because it is a bit stretched. I'd be looking for another consolidation, a bit like what I was talking about with those Hong Kong stocks. But if I'm in this, I'm letting this run because the trend at this point is very much up.
All right, I think we look at this every week. APX.
Trend remains up. Is it going to consolidate though? I think last week I've probably been talking about that it feels a bit stretched above the moving averages. Maybe we get some sort of consolidation while the averages catch up. So if I'm in this one, I'm happy to stay in. The trend is up, but the trend is elevated above the moving averages. So maybe we're heading for some more sideways chop. But I think it's certainly got more upside potential in the months ahead. And if we do get the sideways chop, maybe that provides an entry opportunity, but that'll be something to discuss in future weeks.
All right. MRL.
So I've got a few of these. I got a few of these last week. I got a buy signal for this. It's a motion trader stock. Yeah, I think the potential of a trend is here. So we've got this stock which seems to have some upward momentum along the moving averages. Looks like we've got a sideways consolidation at the moment, back to the 50-day moving average. And we've generally got a series of higher lows. So I think that's got the makings of an uptrend. We really need to see, I think we really want to see a nice strong move up towards 37 to get some momentum behind this stock. I think it's got the potential to do that. Whether it does it, it's a matter of wait and see. I think it could be bought at current levels. Stock would be below one stock could be below the 100-day moving average. How far is that? It's about, say about 20%. So there's a bit of 20% is reasonable risk, but then it's also one of those stocks which, could this double? Absolutely could double. So I think it's asymmetric. Let's just see whether it delivers or not.
Okay, WC8.
Yeah, a little bit, probably a little bit early for me because I've still got these moving averages. The moving averages are starting to stabilise, but they're a little bit of time before they turn higher. I've had this nice initial run. Like, you know, the risk for me would be that, you know, let me just measure this out. Yeah, there's a bit of risk here. So say even buying at current levels, just to have the stop back down below the October low, is looking like 30%. So this is the thing with these lower priced stocks. I don't quite like the risk perspective of it at the moment. It's one which could maybe like start to base and turn higher, but it's not there yet. I'd like to watch this one develop a little bit further.
All right. I think there's one here which is VST in the USA. Oh no, we just looked at this one, did we? Oh no, we looked at this one before. Sorry, I'm a bit confused. Let's look at MIN.
MIN?
Yep, MIN. Yep.
Yeah. So if someone got on this initial part of the move, that'd be great. I'd be saying I'd be staying on board with my stop loss in place. In terms of if a position hasn't already been bought and someone's just looking at it, I'm inclined to wait to see whether we get a bit of a pullback. There's been a bit of excitement in some of these mining stocks. It has had it is a big run off the low. I think that there is a possibility this does start to just chop a little bit. Maybe that provides an entry point. So yeah, if someone's got in early, great. I'd be staying in. If someone's not in, I'd be watching it, see how this price action develops, with the idea of buying if we get the right type of consolidation and maybe a breakout from there. So one to definitely be keeping an eye on. This rally has certainly severed this strong downward momentum that was in place. But often after we get strong momentum downside, strong momentum upside, then you get consolidation, and then that consolidation can then set up for the next move.
All right. PME.
Trend is up. And look, I struggle to buy a stock like this because it's just gone so far. It's a bit above the moving averages, but you know, who knows how long this trend can go. Like, you know, we could have been talking about it, you know, back here in May, and I would have said the same thing, going, oh look, it's come a long way. I probably struggled to buy it, and look, it's continued upwards. So if I've got it, I'm more than happy to continue holding it. If I held it for a long time, you know, I could consider, you know, if it's yeah, look, if it's in my portfolio, I'm happy holding it. Wide trailing stop, let it run. Sometimes, like, you can consider scaling out of a big profit if you get if it starts becoming too big a portion of a portfolio. More often than not, though, I just let them run until they hit their trailing stop. But it just gets harder to buy after it's run. Theoretically, we should be able to just buying the new high should be something we should be open to do. And I am open to doing it, although, yeah, even knowing the probability favours the path of least resistance, which is upwards, just seeing such an extended rally does make me pause.
Okay, we'll do a couple more. OPT, if that's okay, Jason. OPT.
I've looked at the clicked on the US one.
Yep.
Yeah, so this has been a bit of a down and out stock for a while. Had a full start last or earlier in the year. It looked like it was getting some momentum, then it all just fell away again. Maybe this is it. I wouldn't buy it at the moment because it is a bit stretched above that 50-day moving average. If I was in a little bit earlier, I'd let it run, give it see what happens, see whether it can continue this upward momentum. If I wasn't in it, I'd be waiting for that consolidation, see what the consolidation looks like, let the moving averages catch up. There certainly could be a play in this stock, but it's just not something I think I can just latch onto at the moment. Probably want a little bit more price action.
All right, and we'll finish off with OSL. Thank you.
Yeah, 1.5 cents. But it's not without prospects. From below the averages to above, we've got the consolidation back towards the averages. Now sort of like trading along up with the averages. This could be like this. Work out some risk around it. This is the tricky part with these stocks. I think to give it a decent chance, I think it probably requires a stop below the 100-day moving average, which is 37% away. So, is someone willing to go, look, okay, I like it enough to say I'm happy to go 37%. You can have a stop just below the 50-day moving average, but still looking at 25%, and it could easily just come back, tip a stock, tip a stop loss at 25% and then continue up. So I feel it needs to be below the 100-day moving average. But then it's highly asymmetric because 1.5 could have doubled at 3 cents, sure. So it's asymmetric, but you just got to be comfortable with the amount of room you might need to give it. And if someone happens to already be in from lower levels, great. I'd be letting it run, and I'd risk giving back in the open profit for the potential of a much greater win. But the odds are always against, I think, these really low price stocks, but some of them do get up. So let's see how this one goes.
All right, fantastic. And I think we will wrap up there, Jace. Thanks for another fantastic week of our Selfwealth Live technical analysis edition here. Without your help, as you could see from the start, I was scrambling for answers. Don't forget to like and subscribe as we say that, and ask any questions you want through any of the channels that we will monitor, obviously, and we'll have a look. Whether it be the comments, whether you want to hit up Jason over at motiontrade.com.au or me at selfwealth.com.au. We are here to help. And thanks again, Jace. And thank you everyone else for coming. And
that's been good. Thanks, viewers. Thanks for persevering with my IT issues at the start. Glad we got that sorted out. And we got through lots of stuff in the end.
Good on you, everyone. Have a good week ahead, and we'll speak to you next week. Take care. Bye-bye.